Hi, Tom Braunagel here from the Braunagel team at Keller Williams Realty, and I'm here with my good friend Gary Seymour, a absolute trusted resource with us, helping us get through any and all short sales here. And really, we have a topic that we want to talk about today, right? It's hardships. Gary, what's a hardship?
The hardship in a short sale situation, because that's the situation we're referring to now, is something that almost always bears itself out in a financial way. And by that I mean, if we look at a homeowner's life at the point in time that we come in contact with them, we will most often notice that there's been some identifiable reason, a catalyst, if you will, for their current situation. And that current situation in a short sale is most typically they're unable to afford their home or pay for it going forward. So the hardship, Tom, is that thing, a loss of job, a divorce, drop in income, not necessarily a loss of job, but a reduction in income, death can be a hardship, potentially. Relocation can be a hardship. Okay.
Gotcha.
A growing family, more people in this day and age, we're seeing it, where people are taking in their elderly parents and things of that nature. In other words, something has changed financially in the homeowner's life that prevents them from being able to meet that monthly mortgage obligation. And that's a hardship in a nutshell.
Gotcha.
Right.
So at the end of the day, it relates back to your ability to pay your mortgage.
Always. The whole loss mitigation model, and that's a fancy term that we use in this world, loss mitigation, whether it be for loan modifications or short sales or deeds in lieu of foreclosure, those things. The entire model is built on hardship. You have to prove to your lender or servicer that there is a reason that you can't pay, and because of that, you need relief.
Gotcha. So, growing family, for example, I have my family's growing, another mouth to feed, more insurance to pay. If that affects my ability to pay my...
Potentially, yes.
Gotcha.
Potentially, yes. Illness, divorce, things of that nature. Things of that nature.
So, how does a homeowner prove a hardship to the bank?
Well, the way that it's done, and this is universal, and this is, whether we're proceeding under the government programs that are out there or under the, in-house programs that certain lenders have.
Yeah.
There's a form for it.
Yeah.
Now, that form is most often something the homeowner can download from a website, and they actually tell their story. That's all there is to it. And it's usually one page. And what I often see is homeowners take that opportunity to rail on the lender. You can't do that, because you're asking this lender to forgive you of certain amounts of debt, and oftentimes a lot of debt.
Yeah.
So when we say hardship, we want to basically, in 2 paragraphs, say, this is what happened to me, and this is why I can't pay you.
Right.
And, in essence, it's a sympathy letter. That's what a hardship is.
And by the way, there is some guidance that you'll get in putting that together here. So
absolutely.
Yeah. Now, when does it get submitted to the lender? So in other words, I sit down, I meet with you, and we discover there's a hardship.
Well, Tom, we're going to do some other videos, and in those other videos, we're going to talk about the different types of short sales.
Yeah.
And there's several types of short sales. But for today's purposes, generally speaking, a hardship letter, and that's the form that it takes, is submitted to the lender along with all the other financial documentation necessary to justify an attempt at a short sale, and that would be pay stubs and bank statements and things of that nature. So the hardship letter is in essence the introductory letter that goes along with all of the financials, and it lays on top. I always put it first. This is my story.
Right.
Please look at this. And then look at all my financials that support that hardship notion.
Got it.
Listen, my income is off 50%. Look at my financials attached to this. And in that way, the hardship letter is borne out. The reason for it is borne out by the financials themselves.
Sure. And last question, Gary. If there are multiple liens, multiple mortgages, does that get sent to all of them?
Good question.
Yeah.
The rule of thumb with regards to that is if you are attempting to have that particular lender qualify you for a short sale, either under the federal programs or their own programs, yes, you must submit a hardship letter along with all the other financial documentation that I call the short sale package to that particular lender. So quickly, if we have a first mortgage but we're not short to it, in other words, there's enough proceeds from the sale to cover it, we're not short to it.
Got it.
We don't submit to it. Hardship or anything else.
Sure.
But
It's
if
not
we're
sure.
short to, say, a first mortgage and a second mortgage, both of them, and that's common, it's happening every day.
Right.
Has been for years. Yes, we must submit to those. Okay. And by the way, hardship letters aren't submitted to your credit card, company that has a lien on your property. That's a whole nother thing that we'll talk
Another
about
story.
on another day.
Great. Gary, thank
Hey,
you.
thank you.
All right, bud.